Welcome to the Orange Hammer Podcast. My name is Corbett Storick. I've been a licensed general contractor for 8+ years, specializing in new construction, renovation, furniture building. I'm the son of an architect and an interior designer, and I've been surrounded in this industry since birth, watching all aspects from concept, design, build, punch list, and of course, all the problems that come up in between. In my time in Durham, North Carolina, I've noticed a significant gap in knowledge between homeowners who need work and the people who do the work. On this podcast, I hope to break down the process of homeownership from the perspective of both the homeowner and the contractor in an effort to help raise the knowledge of homeowners about their homes and the construction/renovation process. I hope you enjoy. If you're enjoying the Orange Hammer Podcast, or if you have a topic that you want covered, or have recently done a project, please contact the Orange Hammer Podcast. The Orange Hammer Podcast is on Instagram and Facebook. Please like and subscribe, share on whatever platform you're enjoying your podcast on. Also, check out our YouTube channel, The Orange Hammer. The Orange Hammer Podcast is proud to be brought to you by CRS Contracting LLC for all your construction and handyman needs, new buildings to renovations, furniture building, EV charger install, or even a TV mounted. You can call me, Corbett Storick. It'd be my pleasure to help you. You can find me on Instagram at CRS Contracting. WSDG, the Walter Storick Design Group, specialists in architectural and acoustical consulting. Check out WSDG.com. And Taylor Bragg, for all your artistic needs in all mediums. You can find her on Instagram at brag_about_art. That's brag, BRGG, with 2 G's. She's the fantastic artist behind the Orange Hammer logo, and she did my fantastic table painting of my podcasting table. The Orange Hammer Podcast is proud to be brought to you by Stacy Sloan with Keller Williams Elite Realty, proudly serving the Durham and Triangle area for 25 years. Call Stacy at 919-972-1180. The Orange Hammer Podcast is proud to be brought to you by Rachel Z with Rachel Z Real Estate Team Realty. From the Triangle to the Triad, call Rachel Z at 919-323-6068. All right, everybody, welcome to another episode of the Orange Hammer Podcast. Today, Adam Haller, am I saying that right? Haller?
That's correct.
There you go. Adam Haller in the house, and today we're talking about who knows what, but we're going to focus it most likely around mortgages.
That's right.
So, jumping right in, you're a mortgage broker. Is that the term, broker?
That's a great question. There's actually so many different models of how the mortgage business runs. I'm actually with a mortgage lender, an independent mortgage lender.
Okay. Well, I guess we can just start by breaking down all of those parts. So what are the different parts? What's the difference between an independent lender and a broker?
Great question. So a lot of people just don't understand that. And you've got your traditional banks. Let's say you walk into your bank where you've got your deposits. Those are banks, and they have been the backbone of lending for homes for generations. There's also mortgage brokers, the word you mentioned. Brokers are independent business people that operate on their own. Sometimes they're companies and can actually be sizable. It can be a company of 1,000 people. Usually it's 1 or 2 or 10 people, and I've worked for one before. They never close a loan in their own name. They have no deposits or anything like that. They don't have any balance sheet per se. They don't have any assets or anything to lend out. They just act as an intermediary between you who need a home loan and the banking industry. They shop around for the best terms and rates for you. And brokers are a great asset to home buyers, by the way. It's a great model. Then there's this third path, which has a few different names called correspondent lenders or independent mortgage banks, independent mortgage lenders alone. These companies, like where I work with Princeton Mortgage Corporation, we have a balance sheet. We get funds through warehouse lines, as it's called in the business. We fund the loans directly in our name. We lend to you as a homeowner. And of course, we sell those loans off in the secondary market, as it's known. All 3 different channels for originating mortgages sell the loans. And that's a very agonizing or confusing thing for most regular people. They don't understand it. It's frustrating. Your loan gets sent off. You close a loan at some big institution, and then the next thing you know, they're saying, hey, I sold your loan to Wells Fargo. You're like, well, I don't even have anything going on with them. Why is my loan going over there? And that's a whole big subject about why and how that happens.
But at the end of the day, that doesn't affect. It's just like a different letterhead when you get your statements and stuff. Like your mortgage loan and mortgage and loan are the same thing. Your mortgage, like your principal and your like terms of that mortgage, your rate, like your payments, that has been locked. It can be you can be sold on the secondary market 100 times over, but that doesn't mean Wells Fargo gets to send you a letter and they're like, oh, we're just changing your interest rate. Like,
correct.
Like it's
absolutely.
locked. So
right. The problem homeowners face though is that different companies do better or worse at customer service and are more amenable to dealing with issues that come up in the future.
Okay, so that's probably more interesting to listeners. I've never had an issue that has anything to do with my mortgage.
Right.
I figured it out before I bought my house, and it goes on auto pay. So
Correct.
What are mortgage issues?
Well, you just said the holy grail to companies that provide servicing or service your mortgage. Companies, these banks love it when you go on auto pay. It's simple for both sides. It's cheap to administer. They just set up their computer's already built out and set up. So that cost is already spent, and just having the money come every month. Nobody even has to open an envelope, and the money's sorted out. It works great from the banks. You're never late. There's never a problem. It's the cases where all of a sudden you're doing something special, you're moving, you're behind on your payments. Maybe you lost a job or something happens and you have a struggle going on in your life, or you have a medical. But I mean, these things happen for very legitimate reasons. I just want to emphasize, it's not that people have trouble with their mortgages because they're of bad character. It's that we get curveballs in life. We face a life storm. And then all of a sudden you have to call and say, hey, I've got this thing going on. I've got this challenge. Something's going on and I need service. I need a real human being to talk to who can understand my situation and help me figure it out. Different companies do better or worse at that.
Oh, okay. So not to be the devil's advocate of what you just said, but that's not a mortgage issue at all.
Correct.
That's not an issue with the service of the mortgage. That's an issue with a human being and their life.
Yeah, exactly.
Yeah. And not to be cold. That might sound cold, but at the end of the day, if something happens in your life, that's not the mortgage people's fault. They
couldn't agree with you more.
They checked your information and you should have been able to, they made me prove I could pay it so many times over that, when those speed bumps happen, I should be able to keep paying it.
That's
so,
correct.
Just to clarify for listeners, do you actually have an example of a real mortgage problem? Because so far, everything you mentioned is a problem with just, individuals and their lives. That has nothing to do with, the mortgage holder having screwed up in some way.
Well, I don't want to cite specific examples that I've seen, but you can easily imagine a case from people behaving badly in the world. Everybody involved, humans have a habit of not following the rules, of lying, distorting, cheating, doing bad things, and that goes across the board from homeowners to banks. There's bad apples out there in the bunch, and you can imagine a situation where somebody squeezed both the originator who started the loan, the lender side, whatever model they were under, or the homeowner fudging paperwork or saying they could afford or pushing the limit or saying, yeah, I can do this, I can do it, and being really not able to. And then facing some type of challenge and making the payments a year or two down the road. And then because they were already fudging and fibbing about their situation, it shows maybe there is a lack of character there, and that those individuals, whoever it was involved, have damaged the process. And the process is very bureaucratic, so it's very rigorous for you. You said, "Oh, I had to go submit all the stuff."
Yeah, I'm gonna need you to give some specific. Don't give me people, but I'm gonna need to give me some specific examples, because like everything you're saying, I'm just like, I don't understand how that's possible. I had to give so much paperwork to these people. They checked my numbers. I couldn't fudge anything. They got real tax returns that I filed with the federal government. Those are the numbers they took. I couldn't fudge them in any way. And then I still couldn't qualify. And then I had to get my parents to co-sign, but I didn't need any money from them. I just needed them to be like, we'll cover it if he screws up.
Right.
And it went on auto pay day one. And I'm just like, so I don't understand. Like there was simply no way anybody could have fudged my numbers, because I handed them a tax return from the federal government. So that's not a fudgeable number. So how does that happen? And then also,
we don't often ask for tax returns. So one of the key things would be getting employment verification. And let's say you had an employer who was really a cousin or something. It looked like it was arm's length, like you just worked for some boss and they give you the paperwork and everything to show you were making that income. But in reality, it was somewhat fabricated, or it was true but not really perpetuating into the future.
So that's still the individual. There's still, do you have an example of the people who hold the mortgage having a problem? Because so far this is
so on the individual.
So far only individuals are screwing up, and you're calling it a mortgage problem. This is an individual screw up
on the institutional side. So institutional side.
When does the institution screw up, and I actually need customer service? Because so far. Not to contradict, but like you say customer service, it sounds like people just are going to call and beg for a break.
Yeah. That happens all the time, and so that's sort of my mental spot on it. But yes, the institutions screw up all the time. One of the key screw ups would be when the servicing is transferred, using some buzzwords, but when your loan is sold from one institution, or institution A is sold to institution B, that could take days or weeks of the paperwork to move over, or they're supposed to communicate that with you in the mail, and then maybe by email, and maybe even a phone call. They should be communicating with you so you're aware where to send your new payment. Let's say you're not on auto pay, and then you send the check to the original bank A instead of bank B. They should deal with that. Honestly, they've then done something. These two institutions have moved your loan around at their will because it's profitable to them.
That's a great example.
Right. And then you are now showing up as in arrears. And then you call to say, wait a second, I paid that. And what's going on? You never cashed the check, but now you're saying I'm late, and you report on my credit, and my credit's now damaged. What's going on? And then you're on the 800 number dealing with that over and over. And every time you call, you get a different person, and they're incompetent. Incompetence is rampant across society. I mean, you can find incompetence everywhere we turn.
That is 100% accurate. So that's a great example, because that's a world I am slightly unfamiliar with, because the bank that holds my loan doesn't sell their mortgages, which seems like an anomaly after what you're telling me, but I didn't know that at the time.
So there's actually an interesting little thing going on as well. You don't think they've sold it because the same letterhead is coming every month for 30 years.
Oh, no, I know they haven't sold it because I just asked them, because I found out not long ago when I was having this podcast that happens all the time. And they were like, no, we actually don't give out that many personal mortgages because they're not that kind of bank. And they did it for me because of our family's history with the establishment.
Okay.
And they're one of the small, very few unlikely candidates of banks that just don't happen to sell their mortgages.
Yeah. And this whole discussion,
which sounds like it's an anomaly, though, because it sounds like the secondary market, they get tossed around like it's no big deal.
Correct.
Yeah.
And so this is going to be an interesting subject I want to dive a little deeper on.
Yeah.
Because when you say your loan gets sold, most people imagine when that happens that the name on the letterhead, like, I was sending a payment to bank A and I'm going to send it to bank B, and that is true. And that is called the servicing. Who is going to provide the customer service for your loan over the 30 years? The underlying loan in the banking industry is separated from the servicing rights. So these mortgage servicing rights, called MSRs, is the jargon. Those are sold separately from the underlying loan. Like, who has the capital? Let's say your house is $100,000. Who is actually holding the bond that has the $100,000 note in it and who is doing the servicing. These are different institutions, and each of those parts, once a loan is originated, it can be bifurcated and sent the servicing to institution A that will just stick with it forever, and then the underlying part is traded on Wall Street throughout time often, and the servicing is sometimes sold at later points. Now, there are smaller community banks, and especially for products that aren't your traditional just 30-year conventional fixed product, that the bank will just hold it. Let's say do a construction to perm loan for you build your own house, a very special thing. It's very custom to you and your situation. You know the bank, as you said, they will hold it on their own portfolio to keep forever the whole thing, both the underlying loan and the servicing rights. But they're both so profitable. Both angles have a lot of upside for people, for investors. And there's a whole world there. There's this whole world. And as I've kind of gone from that world, that's the world I traveled in for 15 years, really, from around 2008 through the end of 2022. I would say that world is completely separated from the world of homeowners and realtors and like builders. The people who are actually dealing in housing are just regular humans, for that matter. We're a little bit disconnected from this whole Wall Street activity of buying and selling the mortgages and the servicing rights. The key thing to keep in mind, though, is that it is connected, and it is really one of the explanatory reasons about what happens with mortgage rates, what's going on, what are these products available, why can I not get a fix and flip loan, or why is it so hard to get a bridge loan? All these things come back to what's going on in the secondary market. The secondary market for mortgages is the driver for everything that happens in the primary market. And I say, let me just explain that. You as a homeowner going to the bank, that's considered the first step in the process of how the loan gets sold. That's the primary market. You are going to the bank and saying, I will issue this IOU and you will give me the $100,000. So the bank is actually buying the IOU from you. They're buying the note for $100,000. And then once they have that IOU, they can do whatever they want with it. You've signed the stack, an inch-thick stack of papers that gives them that right. And they then do sell it off and try to optimize and sell and get the most value. And just for listeners' understanding, that value is approximately the total gross value, about 4%. So if the bank gave you $100,000 for that IOU, they can immediately turn around and sell it for about $104,000. That's just a ballpark, of course, and sometimes they lose money, so it's not. And there's a lot of overhead and cost, and the margins are actually razor thin. That $4 of value has pretty razor thin margins, and in fact, the lenders are in a dire straits right at this moment because of the path of interest rates that got us to this point. But in the secondary market, investor demand, what investors want. These are institutional investors. So where does your mortgage go? Who is the funder at the end? It tends to be pension funds and long life insurance companies, big institutions that have a need for long-term assets where they really want to hold something for that 30 years. It's just the kind of thing, like people have pensions that they're not going to get a payout on in 30 years. The money's there, they have to invest it, and mortgages make a good fit. That being said, most mortgages don't last 30 years. Most people pay them off because they either move or they refi in somewhere between 5 and 10 years. And that's
so just put it on auto pay and avoid all the problems.
Yeah,
because you're nobody who's not in the world of secondary markets as a profession is going to be able to learn enough about the secondary market for it to even factor in to how you make your decisions on your mortgage.
Right, but there's a couple of things.
Just don't put it on auto pay and don't worry about it switching institutions and them having shittier customer service.
Yeah, absolutely. So let's get at what you can do as a homeowner. I got real technical.
I'm like
there.
super, super happy because I didn't really know how quickly they bounced around on the secondary market. Because I'm one of these people that like as a concept, I know what you just said, but the further you dive into that, I'm probably just going to be eyes glossed over and lost like most people who are not in that. But I'm so freaking happy that my my bank happens to hold the mortgage, the note, as you say, and the marketing rights. So I've just like always had to deal with the same people. But that comes down to like my grandfather starting a relationship with this bank, 65 years ago, and our family been using the same bank for 65 plus years. So that, they don't do a lot of like small time, insignificant to them residential mortgages. But we had that like relationship built up. But to what you just said, I did in fact refi. I stayed with my bank. It's called Northern Trust. It's a bank in Florida. But like I got a 30-year, but it wasn't fixed. It was a fixed 10, and then the first arm was 10, and then it would fluctuate. And so at about, I think it was year like 7, my brother, who's in the bond broker dealer finance world, was like, you need to refi because we're seeing what's going to happen, and your 10-year fixed arm is going to end and you're going to be screwed. And he was right, because I don't know exactly how many years ago it was, but I'd be in that flexible interest rate and I'd be screwed. Because what are we at now? 6.5, 7, something in that like world?
7.5.
7.5.
It went up in the past week or 2
Absolutely
days.
Brutality. So I refied and I moved from that 10 over 30, to use the jargon, to a 15-year fixed.
Great.
And I went up like $200 a month in payment, but kept the same 3.25 or 3.5 interest rate.
And then lowered your term by like 10 or 15, depending on when it worked out. But you lowered the amount of time remaining on the mortgage by like a decade of your life. You won't have to pay anything. It'll go to zero.
Yeah. And then also I pay like $50 more a month. I just set up the auto pay. So like that'll chop a year off when it's all said and done. So in my like, mid 40s, when I've moved but have this still as a rental house, it will one day just no longer have a mortgage.
Yeah, that's great.
Amazing. But also tagging on what you said, even me, with as good as that sounds and how great my like assets are, couldn't qualify for a construction to perm because my tax returns just did not show enough income, which you do need when you work for yourself. Maybe people who don't work for themselves can just show you an employment verification or whatever. But when you work for yourself, that is your employment verification.
So let's talk about that. I think that's of great interest to a broad audience. It's like, what does it take to get qualified for a mortgage? And what are some things you can do to improve the likelihood of getting good rates, good terms? How do you get the best terms?
So I was trying to get a $600,000 loan, and I was basically told the short and sweet of it was that I needed to make either like free and clear profit, not like what my company brought in, either $75K reported on my tax returns this year and next year, or $150K this year on my tax returns. And that would qualify me to get that kind of loan.
Okay.
Yeah.
So all loans are dependent on your income, and that income gets reflected as a debt to income ratio.
Yeah.
So the total debt monthly really should never exceed 50% of your gross income, but before taxes. Gross means like if you make $5,000 a month, that's a 5,000, like 60,000 year salary. Just that 5,000 a month, you should never have total debts, and that includes your car payment and credit card minimums, and everything else should not be over 2,500, including your housing, all in housing costs. So the income matters, but
then of course, as a small business owner, my taxes do not look the greatest for particularly qualifying for a loan. Like for listeners who are like, what the hell is he talking about? Well, you don't report every single cent, and you write off a lot of stuff. And you make your as a small business owner, you try to pay as little taxes. It's not against the law. There's just flexibility in some of these things. And
so
could have I filed the taxes my whole life, never thinking about qualifying for a loan.
Right.
You bet your ass the next couple of years I'll be having a conversation with my accountant going, okay, now we're trying to qualify for a loan. So
the good news is the mortgage industry has responded to that by providing some products and programs out there for bank statement verification of your revenues, so that we can say, okay, well, this might not qualify for the terms of a Fannie, Freddie, Ginnie. Those are the government institutions that are backing the credit risk of the typical mortgage. But if you have a situation as a self-employed individual with bank statements, we at my firm, at Princeton Mortgage, we are totally ready to help you and handle that and look at that and take that into consideration. But the big thing, no matter what program you go with, I wanted to point out is the credit scoring FICO scores. People seem to have misunderstanding about what's going on there, and you really want to have excellent credit. There's no reason why. I don't care what income level you're at. I don't care anything about your background.
Yeah, my 800 score didn't help me at all. So
well, actually, it helped you more than you think.
it didn't get me the loan.
Well, I got you. You're in a loan because of it. Let me just make that clear.
That was 11 years ago. I'm trying to get another loan.
Okay.
Yeah.
So having a 760 or higher FICO score, and just for your listeners who don't know, it's like this scoring model that is a little bit opaque. FICO is a private company that doesn't release its model. Nobody knows exactly what the formula is to get it, but it's ranges from, like, let's say 500.
It's the sketchiest thing I've ever heard anybody say about our financial life.
It really is kind of, you've got this number.
They've got a model, and we don't know how it works.
That's
and
correct.
They don't have to tell us, and they're an independent firm. Okay, so they're just making it up as they go along. They like the way you spell your name, 815. They don't like the way you spell your name, 610.
I will give them
what?
I will give them credit, and at some level, when you're looking, yeah, I mean it's more sophisticated than that. We know that they're striving to make it work.
Prove it.
Well, there's actually a
You
lot
can't.
of
You just said they won't release their model.
Correct. Well, we want to know the model. We definitely can't prove that. However, one thing we can.
I'm telling you, there's 3 dudes who judge you by your name. I guarantee it. No, I'm just fan.
It's the Three Stooges. There's probably incompetence there. It's an institution.
There's 100% incompetence everywhere.
Right, exactly. So there's bureaucracy and just bad bosses and bullies, I'm sure, like everywhere else. However, if you really step back and you say, well, if it didn't work, why would we trust it so much? Because it does actually provide some type of indication. It does work as a prediction of people's behavior. So it's been refined, and they're trying to make a business of it. They're trying to make money by selling those hard pulls on your credit. They make money every time I pull credit for a prospect who wants to get a loan.
Yeah.
And they want to make sure that I keep coming back as a mortgage lender, as all the banks would abandon that service if it didn't really work.
Yeah, and that's why you can't just like constantly pull and check your credit, because it will affect your credit in a negative way.
You can do it yourself, by the way. Like
I meant in the official capacity of having an institution pull it. Like,
correct.
You can go to those online services and get like a close enough thing.
And by the way, there is one free service. Because of this, it's gotten very political over the years. So there's annualcreditreport.com. That's annualcreditreport.com. It is a free service, government mandated. You can pull your own credit from all 3 bureaus once a year. I strongly recommend everybody do that.
Yeah, that's very smart.
You just see all the problems and you can sort it out.
And just be aware of what's going on in your own financial world. Right. Like I don't use that particular service, but I second your recommendation to talk to either that independent company or your bank. I know personally I use Bank of America, and they have a free, it might not be like the official FICO, but it's close enough, and they send me a monthly email that's like, hey, here's your credit score once a month. And I just like hop on the app, and to be honest, it's never dipped below like, I don't know, 750 or whatever. Nice. So I just like, I not that I've like stopped caring, but I've stopped paying that much attention to it. Like I have all of my, I have basically everything on auto pay.
Sweet.
Because I know how, like, I can't go a month without the internet. I just need it. So I have to have it on auto pay, and it's a write-off, and it's a business expense, and it's just how it works. Yeah.
That's a great strategy, Corbett. Being on auto pay helps make sure that you're on time every time. So there's a few factors that we do know affect credit scores. So being on time every time is the top of the list. It's the most important thing. You should make sure that your debt bills are being paid before the deadline. like it's a religion. I mean, if all of a sudden the deadline is here and you got a credit card payment due to, I don't know, Citibank, and there's no Citibanks in the Triangle area, but the next one's up in Virginia, you need to get in your car and drive to Virginia and then jump through
Simpler
hoops.
than that. Everything's online.
I'm just saying,
Yeah.
right. I'm giving you an extreme example to point out that you need to make getting your bills paid on time the most utmost urgent priority. And then people have this attitude about their credit cards. It's like, I see it. I'm like, well, I was just late like a few days, like, oh, about 3-4 times this past year. Who cares? I'm like, oh, that's like a crisis.
A lot of points.
Yeah, I'm like, oh, that's why you have like a 580 credit score. I'm sorry, you're denied. We're not even proceeding with the conversation. I can't officially deny you. I'm not an underwriter. Only underwriting can deny, but I gently wiggle my way out. Like, there's nothing I can do here. Your credit is damaged. You were late on bills and late on a mortgage, and you're coming to me to refi. Like, that is the number one thing.
And if you're young and you're like, how do I start building your credit? I'm sure you probably have some suggestions, but what I personally did was in college, the first moment I got out of a dorm and got into like a rental apartment, I made sure I had all the bills in my name, like the internet, the cable, the water, the power, all that shit. I put that in my name, set it on auto pay, and I got the money from the roommates. So that helped my credit. And then also I immediately got a credit card through Amazon, but I simply only used it to buy my stuff from Amazon and then paid the bill in full when I got the bill. And just those small, simple things. Like, it's not like I was just like balling on Amazon. It was like twice a year, I'd buy like some birthday gifts for some people and then like a big Christmas shop, because I was like in upstate New York and my family's all over the country. So I was just like, okay, Amazon, send everything to everybody. Boom, boom, boom. And that was how I Christmas shopped in college. But having that credit card that, I put like $400 a year on that thing. I put nothing on that thing, but paid it off in full. And like you said, every time you have a bill that isn't late, I don't know what the actual numbers are, and maybe it doesn't work like every time you are.
Let me explain a little bit more. You brought up some
great
good points, and one thing I think you might be confused on. I hate to break the news to you, but utility bills do not actually get reported to FICO or to credit bureaus. It doesn't matter unless, under one circumstance, if you're late and they report it or send it to collections, then it becomes damaging. So not paying utility bills or being late and problematic with them will damage your credit, but being on time doesn't necessarily help your credit.
Oh, okay. Well, then fuck what I said about the utility
it's okay.
bills. But get a credit card and pay it off on time.
Right on target. So
pay your utility bills with your credit card.
Let me run down real quick. So absolutely, you got to be on time every time with your credit bills, all of them, everything: car payment, housing payment, credit cards. Then beyond that, the next thing is they want to look at, the model will definitely consider a variety of credit. Do you have a car loan, a couple of credit cards, and some other type of personal loan maybe from the bank? And are they being paid on time? And how long have you been having credit? So the earlier you start, the better. I co-signed on some cards for my adult children right when they were 18, so that they would all of a sudden have something reporting under their name right away, and it was on time every time immediately, so that they have the highest chance of success by their mid-20s. They've got like a 6-7 year period of like great payments before they even try to really get started. Their college life is all of a sudden building a good FICO score instead of waiting till after college.
Yeah, it's funny how you talked earlier about institutional customer service. My mother started a joint bank account with me when I was born.
Yeah, exactly.
And so like when I actually needed to call a bank and have a conversation with somebody, they'd be like, "Hey, we want to thank you for banking with us for 27 years." I'm like, "Yeah, that's right, 27
Exactly.
years. I want that 27-year customer service."
Yeah, and they do value that, and we'll give you better customer service.
Oh, 100%. Oh, yeah, 100%.
Yeah, absolutely.
It's true.
The
For all the shit Bank of America, gets talked on, but, no bank has, like, good reputations. They're freaking banks. Like, it's like a cable provider. They're it's like Spectrum or Time Warner. It's like nobody. It's like,
well, I don't want to beat up on any company in particular.
I'll be the one who beats up on them. I don't give a crap. Bank of America is my bank. It's not like they're the saints of the banking world. They're just a bank. They sometimes competently do their job.
Right.
And that's like what, It's all a scam in my opinion anyway, but
Well,
we probably shouldn't go down that road.
I'm glad to.
Because you're in that world.
No, but I'm glad to dispel myths. By the way, there's no. I am not a conspiracy theorist. There are no conspiracies. That's a bunch of nonsense. The fact is, it's a very complex world.
Well, we disagree.
Right, fair enough. But the complexity, people fill that complexity with feelings. But we'll go on. We'll come back to that. Let me finish on the credit, because I want to make sure people understand another one that they're not necessarily aware of, which is when you get that credit card, yes, pay it on time every time. And if you run a balance, that's fine, but never go over really around 30% of your credit limit. So like, oh, well, they said I could borrow $10,000. So what's the problem? Like, no, that was the absolute maximum limit in a worst case scenario for you. You absolutely can't go over that. But if you even approach it, it shows that you're constrained. So this FICO scoring model is going to show, hey, you are super constrained in your ability to borrow, and you're really tapping every resource you've got, and that's unreasonable. So if you can manage your credit card balance to be under 30% of the total limit, then you will be on your way to that 780, 800 credit score.
Yeah, I would just say pay it off entirely.
Yeah, pay it off in full every month. Now, back to the utilities. One of the classic ones are cable, internet, cell phone bills. Those companies will report if you have a dispute and you don't pay. Let's say you got a $200 bill with a cell phone. But I just want to point this out. I have seen people lose their mortgage plan to get a house. They're ready in life to go ahead and move into a home, to buy, to stop being renters. That's a big, major life decision. I go pull the credit, and they have a bad score, and I look at what's derogatory. They got a collections item from a cell phone company, and it's like, well, what's going on here? Why $200? What happened? Well, they screwed me up, and that wasn't the plan, and And I'm like, it's too late. I can't believe you didn't take care of that. You're coming to me. I did a hard pull. If you get your credit pulled at a bank or from a lender of any sort, it's a hard pull. It actually hurts your credit a little bit, because you're saying, hey, I need to borrow more money. When you say, hey, I need to borrow more money, it makes the system, the model go, ooh, this person's slightly more risky. And now all of a sudden you've come and asked for that before sorting out yourself what's going on in your credit report. And being upset with a large corporation, back to like no conspiracy, we'll talk about that for a moment, but these big companies is you without a lawyer as a regular human about a $200 bill against a giant institution, multi-billion-dollar corporation with a whole team of lawyers and all that fine print in the terms and conditions that you clicked on without blinking and agreed to.
This is just stupidity. We could simplify this. Like, people, don't be dumb. Like, come on.
You got to pay the bill.
You're not going to win against Verizon.
And then I'm like, even if you're correct, let me put it to you this way. What if you were to call them right now and say, I'll settle up, I'll give you $200. Can you remove that from my credit? Can you show it paid in full? Can you do whatever you can to fix my credit? Whatever's in your power, even though that's in the past, but I will glad to give you $200. It's likely you'll get some response, because they'd written off the whole amount. That's why it's in collections and derogatory on your credit report. But if all of a sudden you're coming to the table and say, I got $200 for you, people will go like a little puppy with a snack. The people at the big corporation will say, oh, okay, yeah. Let's see what we can do. But make sure you get that in writing and you solve it. But you've added so much headache to your own life by fighting over a $200 bill. It's just unbelievable to me. And it's not that I've seen it just one time. I've seen it a few times, a few different types of companies. I'm like, don't let items go to collections.
If you want to do stuff in life and you don't want to read the contract, you are an idiot. So like, don't be an idiot. Like, there's a reason these contracts are long.
I know, and I don't read all the contracts I sign. Like,
that's a mistake.
Fair, but
respectfully, I
mean,
this is your life. It's your credit, and you only get one of all of these things. Like, I'm not saying you need to read every iTunes subscription update, but when you sign a new contract doing anything, you need to read it.
I'm saying I don't read those terms and conditions. Those are contracts. When you click on the terms and conditions with any company out there in the world, as you're just living and enjoying all this plethora of great stuff we have. We are so lucky to live in the United States of America. It was such a booming country with so many great things, and we all want to participate and engage in all of it. Do you read the stack of papers in detail at the car dealer when buying a used car? Do you read the stack of papers when let's say you're renting a car for one day. You're on a busy trip. You're running somewhere. You're going in and out. You're going to be there for 24 hours. Your schedule is important. Do you take an hour of that to sit there and pore over the contract that some large corporation has written?
Right. Okay.
This is kind of my point.
Okay, but this is my point. It's an unwritten societal rule that when you rent a car, you're responsible for the car.
Correct.
So you know what the contract says. The contract says don't crash this freaking car or you're going to pay for the freaking car.
But then
you're talking about the idiot who crashed the car and then didn't pay for it and let the bill go to collections. That's another level of stupidity.
Right. And we're
not doing apples to apples here.
But there's some weird cases, and I don't know, I'm not talking about the car rental industry, but there's some cases of people who claim they did everything right on their side, but then the car rental company reports the car is stolen because of whatever, and then they get arrested. Like all kind of chaos happens from not reading that contract.
Did you hear that Hertz was like, we're getting out of the electric game? They bought like a bazillion Teslas and then they put them all up for sale.
Well, actually, in the fall, I rented a car at Newark Airport, and it was an electric car. It was a Kia, and it was a very disappointing experience, I have to admit. Like, I was there for the weekend for family reasons, and I was on a tight schedule, and all of a sudden I had to find a place to charge it and deal with all that. It's like, it would have been, New Jersey, after all, they pump your gas still, one of the only states in the whole country.
That's
you get full service gas. And I'm like, I could have just pulled into a gas station in 5 seconds and had somebody fill it up. Now I'm like waiting an hour or two of my valuable 48 hours on the ground.
That's the difference between the Kia and the Tesla. Yeah, because you go to that Tesla supercharger and you're out in 15 minutes.
Yeah,
gone. So yeah, it's amazing.
Bringing it back to so that's another example. So we're talking quickly about like conspiracy theories. I don't think there's a conspiracy to force us all to use electric cars. I think this is part of the whole challenge of mortgages too, that nobody knows the future. Nobody knows the future. And one of the things I always remind everybody in banking and when we're sitting there trying to figure something out, anything about what's going to happen tomorrow, what are rates going to be? Everybody asks me, where are rates going? I'm like, if I only had a crystal ball, what are the lotto numbers going to be for tonight? I wish I knew Mega Millions numbers. Just 6 numbers, just give them to me, right? Give me 5 minutes before they're going to pull the drawing. Just give me those 6 numbers. I'll be good to go. We don't know the future, whether it's 5 minutes, a year or two. So when we have everybody trying to figure out the future and these automakers and government policymakers trying to figure out what's going to happen, it gets to be anxiety provoking, and we expect, even though we're incompetent as humans, all of us have like flaws and we're imperfect. The best baseball players, they hit the ball about 30% of the time, so 70% of the time they're wrong. These are the best multi-million-dollar players in the league, and here we are thinking that everyone else should be getting it 100% right all the time. We've been duped to thinking that we can figure stuff out. So the automakers have really kind of tried to feel out consumer demand. Policymakers want to save the environment, and we just haven't really hit the target perfectly. So on mortgages,
you think policymakers want to save the environment?
Sorry,
I was like, yep, I'm agreeing. Nope, policymakers don't care about the environment. Policymakers are how do they make money?
It depends on which ones.
Policymakers want to make their own money.
Well, they're also interested in power, of course.
Power and money are pseudonyms.
I'm giving benefit of the doubt, and I'm not picking a political side.
Rates are. Yeah, anybody who thinks they know which directions the rates are going, if they're being intelligent about it, all they're doing is regurgitating what they think is going to happen based on a historical track record. But nobody actually knows anything.
For the most part. Yeah. Let me talk about rates a little bit and then come back to the secondary marketing and how that all works, and a little bit about, you mentioned your refinance opportunity you have. So what's going on is that the Federal Reserve is a policy-making institution, and their goal is to manage the money supply so as to manage both inflation and unemployment and balance that. And they don't care who individually wins or loses. That's actually part of their whole mandate. They're not like, they don't care if Adam loses in the mortgage industry because rates shot straight up. They hope to slow the housing market down when it was really booming too fast, too high, too quickly in, let's say, 2021, early 22. So they accomplish that objective by using their levers of raising short-term interest rates. And mortgage rates really are long-term rates, so they don't control mortgage rates directly. So it's not like there's a policy-making body, but mortgage lenders tend to take the 10-year Treasury bond as an interest rate, and that's right now around 4%, and add a spread to it they take this benchmark rate, 4%, add a spread, and that's currently around 3%. You're in the 7.5 at this moment. That spread can widen or contract as the banks feel out the future, as they try to predict and guess and game what people are going to do. And what people are going to do is called behavioral modeling. We're trying to measure and quantify what of the population, which people will prepay their mortgage by either refinancing or selling the house and moving on. And right now, there's this huge effect. It's been well talked about. Some people disagree, but it's really well documented, the interest rate lock-in effect. All these people, everybody who got a 3% rate during the pandemic and the probably whole decade up to those rates were 3 or 4%, nobody wants to sell their house and move and go to a 7% rate. And banks are originating a 7 or 8% rate. I mean, everybody in my space, all my peers are out there saying, don't worry, just go ahead and buy the house now, marry the house and date the rate. So meaning like, don't worry, just get the 7.5%, 8% rate even. Who cares? Because you're going to refi in 6 months or a year. Well, banks know that's the plan, and they're not going to give you the absolute best terms. They're charging even more now. They make the rates a little bit higher to compensate for the fact that you're going to get out of the loan in 6 months. And there is serious overhead.
Spoken like a mortgage broker who wants to sign mortgages.
Right.
Yeah. Do it now. Do it
Right,
now.
exactly.
Do it now.
But it's
Yeah.
like-
Okay. That's not the best advice for the client. That's
Exactly.
the best
It's not
advice for you
necessarily.
to sign mortgages.
Right, precisely.
Yeah.
No, I agree with that. That's why I'm bringing it up.
That's like my realtor just being like, well, you should definitely just buy this one. Like, well, okay. Yeah. You want the 6%, but that doesn't mean this is the best house for me.
Perfect point.
Yeah.
I agree with you. They were 100% aligned. And this is my point, that the lenders who are lending out money, they're charging a premium right now, a little bit higher rate than they would otherwise, because they know they're not going to get it that long. And the overhead to start the mortgage is so high. Look, it's expensive to operate a mortgage bank. I mean, you've got the office buildings. You see a tower downtown of an office building. That's not free. That costs a lot of money. All the people that work there, all the computers, everything, and then the actual cost of the funds themselves. That's what I'm saying. Like, it may sound like, oh, they must be rolling in money. I'm like, no, their margins are razor thin. They're actually losing money. Right now, mortgage originators are not doing great. Actually, a lot of consolidation and loss.
I don't think you're going to get any sympathy from my listeners
I know.
about
Fair
them
enough.
losing
I'm just
money.
saying.
Yeah.
Well, the one and the bright spot are those servicing companies that have these mortgages at 3% where nobody's leaving those houses and they're staying in them and paying them on time every time. Nobody wants to get rid of them. So they had modeled expectations.
Nobody wants to get rid of them, but I think you also need to factor in the fact that, like, I think a good portion of them can't get rid of them if you want to keep the rate at 7%. You can't sell your house and just live in the ether until you find the next house. Like, you need to have the next one lined up. So it's not so much like, I'm a boomer and I'm keeping my 3%.
No.
It's like, wait a minute, I can't afford to pay $1.2 million for a $500,000 house over the next 30 years because you want 7% on my money. Like, you got to factor that. You got to factor that in a little bit too.
A lot of it.
I'm definitely one of those people that's like, I could sell and move and handle 6-7%, whatever the interest rate is. But I also just like I'm one of those people that's just like very happy with my home, and until I get to build my own dream home with my own hands, I'm not moving. So the rates are a factor only because, actually, I don't know. Maybe you have the answer. Are the high interest rates affecting the, what's the word? Sorry, let me find it. Are the high interest rates currently affecting the difficulty of me getting the loan? If the rate was lower, would it be easier for me to get the loan?
Yes, because of that debt to income. Because the rate's higher, it makes the payment higher, so therefore you can qualify for less. And this is a moment when housing prices are still up.
Yeah, especially in the triangle.
It's crazy.
Yeah,
so,
the country might be the country as a whole is probably on a slightly different, but like there is a bubble going on in the triangle.
I don't know if there's a bubble. There's not. Do you see a lot of vacant houses? A bubble would say this neighborhood has 100 for sale signs. I don't see it.
Maybe I'm choosing the wrong term. Maybe we have different definitions for the bubble. There could be a communication difference there. But what I mean is, I thought the bubble I'm describing is that the pricing just went up and up and up and up and up, and eventually everybody thought the bubble was going to burst and everything would drop down and be at a more reasonable rate.
I don't expect that.
that's what people were expecting over the last couple of years. We don't expect that now, and that's the point I'm trying to. That's the different bubble, I guess, that I'm referring to, where like nothing is going down. There has been this slight slow, but the slow from the contractor and realtor side of things, the slow has nothing to do with the rates. The slow is we can't build houses quick enough.
Right.
There's a lack of inventory.
Correct.
Like the second you build a house, it goes up for sale. There's 14 open houses. It's insane.
A bubble would be the opposite. So this is my point. Like,
okay, so that's my bad on the definition of bubble, because I was using bubble as it just being too good and everyone expecting it to pop.
Right. So I don't believe I see the prices; they seem really high. And here's the problem with the 3% to 7% change.
That's really such a gap.
It's so quick. There's the most rapid rise in rates. The path matters a lot. Now 7%. It's sort of the normal mortgage rate over the past 100 years. That is say that again, because that's a point I'm aware of, and that is crucial because people my age don't have a good 100-year history. Yeah, exactly. Haven't experienced it. We're all like, oh, we experienced this 3 to 5%.
We were duped by an artificially lowered rate.
Correct.
And now we're upset that it went back to the reality of basically the normal rate.
Right. This is everybody was clamoring.
That's a very good,
during the
interesting
pandemic.
point.
I heard, if I have to repeat again, everybody's sitting there screaming, well, let's go back to normal. Well, here we are.
Yeah.
Now you're crying. Wait, I thought this is what you wanted.
Yeah.
7% is the normal rate. But the path matters so much. We call it path.
It was too fast.
Right. Way too fast. I don't know if it's what happened, whether we like it or not.
No. But we're having an intelligent conversation.
Right. It was
as
very
Captain Hindsight.
Yeah.
And if it was stretched, if it was just slowed, if we went from 3 to 7 in 3 times, it basically happened in a year.
No, it happened in like 3 or 4 months.
Forgive me. It happened in 4 months. If it happened in 2 years, it probably wouldn't have been. I mean, obviously, it would still suck. Let's be clear, but like it would have been easier pill to swallow.
Correct. Much so, much better. It would have been a lot more gradual, but there would have been trade-offs in society.
Of course, absolutely. Yeah. Everything affects everything. It's not like everything would have been exactly the same, and we would have just had. No.
So one of the
well
things
put.
Just to think about the numbers, people don't think interest rates are so abstract to most regular people. Like they think of like the monthly payment on the house, and if you went for, let's say you have a $500,000 house in the Triangle, which ironically is not that grand. That's a typical nice home. It's not a. It's
in Raleigh. Home. That's a piece of shit.
I'm trying to be. It's nicer than what some people have.
Sorry, I'm going to wave my hand. Okay. I'm the blunt New Yorker. Okay. That's a piece of shit in the Beltline. That's a really nice house in Durham. A not so nice condo in downtown Durham. So, that's just the perspective of where we're at.
Right. So, it's mind-blowing because the salaries haven't kept up with that.
They haven't moved.
Close. Right. And in the, just think about I wanted to use 500 because it's a round number. So, let's take 500,000. And if you took the 3% to 7% rate, it's an increase of 4%. So, on every $100,000 per year, your 4% is 4,000. So, that's times 500. So, 4 times 5 is 20. So you got $20,000 more in interest. If you want to move
that's just interest, people.
Right. On top of the regular house, the housing payment you have now, you're in a $500,000 house in Raleigh. It's not fitting your needs. You want to move. You don't like your neighbor. Stuff that people would move for. Oh, I got another kid. Let's just move down the street, another neighborhood. I like that one better. But about the same budget. I want to leave the $500,000 house and go to another $500,000 house. Aside from closing costs and real estate.
That means your budget basically has to be for a $700,000 house after you start factoring in mortgage, or you're going to be downsizing housing.
Well, not only that, you can't move because I'm just saying there's $20,000 more a year in interest alone. That's over $1,500 a month just to move. Just because you say, I don't like living in this house, I'm going to go to the other one. All else equal, same price, same everything. You giving up that 3% mortgage and going to the 7% mortgage.
Yeah. And to reiterate, this is the same. It's a clone of the house, same neighborhood. Like you didn't get a nicer one. You didn't move to a better street.
But most people want to move because they want to upgrade.
Right. But for this example, just to reiterate to listeners, imagine just you didn't upgrade. And all of a sudden, your mortgage is $1,500 a month. That's
$1,500 more on top of it.
$1,500 more. So you're already paying $2,800 a month for this nice house in Raleigh.
Right, now it's $4,500.
Now it's $4,500, and it's like, whoa,
where did that
whoa.
money come from? Where did you get this big boost in salary or something?
Exactly.
No.
Like unless you were living alone and somebody moved in, or you're renting a room, like all of a sudden it's like, well, how do you do that?
And one of the other phenomenon that we're experiencing is that so many people
Be a teacher and afford it. It's not possible.
Oh, and it's so unfortunate. By the way, I totally agree with you.
Be a nurse and afford it. It's not. It's like it's not comparable.
You're hitting the nail on the head. I mean, this is the challenge that we're facing. We cannot have the situation we've got now. There has to be some solutions, and this does require us as individuals to vote correctly in our elections, so we have policymakers who care about this and can solve it and work towards solutions. And it means we have to make trade-offs too. We need more housing in the Triangle. We are so fortunate on the one hand to have a booming economy, great companies that are moving here. The biotech sector is booming. Major universities with excellent programs.
Great healthcare.
Yeah, like this is a fantastic place to live.
Yeah,
and
it really is.
It's really best in the world. I mean, really, we are so blessed to live in the Triangle in North Carolina. And the problem is we don't have enough housing. And then we need more housing on the land we've got in close proximity. We need to make more walkable communities. We need to invest in transit. These things are all interconnected. We need more supply of housing of every variety. And
yeah, there was a moment where it looked so promising when, like, I don't know, it was probably 7-8 years ago, especially in downtown Durham, just because we're in Durham currently and that's where I live. But like you started seeing this switch where these like crappy, regular looking apartments were no longer being built, and they were making like unique, brand new, but looked old school. And the big switch was they started integrating parking decks inside of them due to like a city council ruling. And it just looked so promising for half a second. And then you started driving, my brother lives in New Hill out in the Apex Cary area or whatever. And I started like driving that way. It used to be fields. And then they threw up apartment complexes like weeds.
Well, that's
so
affordable.
Fast.
I mean, those are,
but that doesn't translate to buying houses.
Right. It doesn't. And the reality again is I think we need more housing. We need more density. This is something that's very politically tense. So people want big yards for some reason. I guess people like to spend their weekend mowing the lawn.
I also think people just don't like neighbors. So like for me personally, this is as tight as I want to be.
Okay.
Right? This is not in line with what you're talking about.
Right. But that's the problem. That's like that desire to have excess land and surrounding that's kind of bucolic and woodsy. That doesn't align with lowering housing prices. So
yeah, it's the opposite.
It's the opposite.
It's
exactly
literally the opposite.
So if you
then at the same time, you drive downtown Durham and you see a beautiful 100-year-old home on a half acre. It's pretty tight.
Yeah.
And they tear it down and they put two homes, super, super skinny, 3 stories on the same amount of land. And it's like,
well, now two families get to live there instead of one. So
no.
Yeah.
From that one singular perspective, that's cool. But now both of those families have to listen to 2 TVs at the same time because the neighbor's right there.
People live in much more crowded quarters all over the world. I mean, we're not like Hong Kong or New York City or Paris. It's not that bad, and this is kind of the thing.
Yeah, but we chose to live in this country, not in those countries.
Well, New York is in the USA, and it has you get a studio for the price of.
Yeah, but anybody who can afford to live in New York could go buy acres anywhere. New York's so expensive. That's a terrible example.
I'm just saying that there's preferences we all have. These are consumer preferences, right? We have beliefs and opinions about the good life and what that means and what it looks for, and we try to implant all those beliefs into our home purchasing decision. Another factor that's gone into play here is that as the rise in housing prices has gone up so quickly since right around 2019 until now, so 5 years of just rapid price appreciation in housing in the Triangle, that most people who are sticking in these 3%, they just live in the same house. I mean, all my neighbors are pretty much the same. Some people have come and gone, but that's like that everywhere I go. And the the people, they've gotten this increase in paper wealth because their housing price, if they wanted to sell, went up, but then they have nowhere else to go. And if
Yeah,
they
it's
did
kind of
go,
a false flag.
Yeah, and you can't move because now all of a sudden you're locked into this 3% versus 7% problem. And it's actually now you're going to have closing costs and realtor fees on this much higher price, and your property taxes going up. Big subject in Raleigh about property taxes up on revaluation.
The only way that it would like be not a false flag is if you were just selling, making this huge profit, and then building something. But again, where do you live while you build the thing?
Or leaving town.
Obviously you want to move somewhere cheaper than you just made up a whole bunch of money. But like for me, it's the exact same thing. Like, yeah, my house is worth conservatively $500,000.
Correct.
I bought it for
middle class home. Even
I bought it for $175.
Yeah.
11 years ago. Like so like, oh my God, you're doing so well. It's like, yeah, I am, but
where are you gonna go?
If I sold this house tomorrow, I would have to get a shittier house by a long stretch in order to feel like I made any money. Or I'd have to actually spend, or to get the exact same house, I would have to spend more money. Not only moving costs, repair costs, all that, like the upgrades I did to this house, and then, like you just mentioned, closing costs, insurance, the realtor fee, the mortgage broker's getting a chunk, the lawyer's getting a chunk. You know, nobody does anything for free. It's a chunk for them, a chunk for them, a chunk for them. Like all of a sudden, I spent $10,000 extra to move to the same house to just have a higher mortgage payment, and I didn't really make any. I didn't make any of the money.
Yeah, it's definitely a real challenge.
Yeah,
there's no question about. No question about it, and it's not so great that the pricing has gone up so rapidly. Now, we said you could take your gains from the Triangle and move to some, I don't know, rural area or a smaller town. You go to Wilson or Rocky Mount, let's say.
Yeah, if you want to move out to Mebane, like you could you make some money for sure.
Right, and what we're seeing is that in the Triangle, we're finding a lot of new neighbors who come from California, New York, or more expensive states.
Right next door. Just bought it a month ago. I painted their steps after they scuffed them up.
Or I think you're from New York State yourself, so
I am. But I've been here long enough that I'm basically a Durhamite now.
Okay,
yeah,
that's fair. And I think it's great. That, by the way, I grew up in South Carolina. I've lived in New
but
Jersey.
I'm also the problem. I'm the gentrifying general contractor.
Well, this is kind
so
of
like, if you shoot me in the foot. I'm not the solution. I build great stuff, but let's be real clear. Like I'm honest.
Well, you're not the evil. This is the whole thing. Like we put in our minds, like we look at our own problems in life, and whether it's our housing or whatever. And we just conclude, instead of looking in the mirror and saying, all right, I'm in this real world with all of my neighbors and everyone else in society. We're all in this multiplayer game together, and I have to work through it. Instead of saying that, we look at it and go, well, it's the Fed. It's the evil developers. It's them.
Yep.
Those New Yorkers, those Yankees.
I have been called the evil Yankee developer, gentrifier.
I mean, come on, right?
All of the things. When in fact, like...
I mean, let me put it in like positive terms to make you feel good.
Oh, I already feel great because I know I've built one-of-a-kind homes, and I rent them for a very reasonable price, and I'm the best landlord in the world, and all of our stuff is like new and works properly, and there's no mold, and there's no rats, and there's none of this crap, and our AC is new, and like you have good insulation and EV chargers built into the house. Like, no, I have no complaints for my tenants because our houses are awesome.
You are literally building roofs over families' heads.
Yeah.
There is nothing more noble of an enterprise.
And we're buying houses that were borderline condemned that basically were not appropriate to live. Well, some of them were okay, but most of them were not really appropriate to be lived in and needed to be gutted. And so that's why we did that.
It's really fascinating to me that anybody I see people say, oh, the evil developers. And I'm like, oh, so you built your house yourself from scratch.
You have to think about who's yelling at you too.
Right.
Because a lot of times, at least in my case, when I've been insulted in that regard, it's from a lower income, uneducated person. And they're just, as you mentioned before, they didn't want to look in the mirror about why they're upset about their life and or housing situation. And it's like, I am a low empathy person, granted, but it's not my fault that your life isn't great. I don't even know you. Like, I'm running a business, working hard,
and you have to
putting sweat equity into my homes. Like,
and you're busting your tail, and you're trying to get it done, and you're doing it. We're in America trying to make a living by working hard and earning a good living is the name of the game.
And the only way to do that is to run a small business.
And you got to make a profit. Like, come on. Like, exactly. I mean, so I look at other people who touch housing, realtors, real estate agents of all stripes, and mortgage lenders. And all I can say is that, yes, occasionally you find a bad apple, but the overwhelming majority are phenomenal people. Then one of the things, I came out from secondary marketing and the back office of these banks because I wanted to help homeowners directly. I wanted instead of being tangential, I wanted to be more direct on helping homeowners with their home loans. And I look at the few people that I have been able to help close, and it's amazing. It's been transformative in these families' lives to get them into their housing situation that they're in now. It has been such a huge spiritual moment for both them and for me to know that we work together to solve all the paperwork problems, and there are always conditions and problems to solve with every case. But it got through it, and we got them in, and the celebrate is just such a positive feeling.
The problem is that story doesn't have any traction. The story that everybody wants to overhear at the bar is how somebody screwed up. That's like the juicy sweet tea story, especially as a contractor.
Right.
Like you've never been at a bar with your friends, overhearing the table next door and hear the one person have this conversation. Hey, Jim, how's that kitchen renovation? Oh, Bob, it's fantastic. It was done on time and under budget, and we're back in our kitchen, and we love it. You should come over sometime. And I'd love to recommend John Doe Construction. You've never heard that conversation. You've always overheard, this freaking dude, he shows up late, and plumbers crack, and he ripped this, and he broke the mirror, and he broke the window, and he ordered the wrong tile, and that's the sweet, juicy tea story. It's like a nurse telling a bloody surgery story. No nurse is like, yeah, it was perfectly fine. It was fun. Let me tell you this story about how everybody took their medication, and there was nothing exciting. That's not a story. Nobody watches that play. Nobody cares about that. And it's the same in the mortgage world. Right. Like, you doing amazing work is the juice I want to talk about on this podcast, which is why you're bringing it up and why I want to talk about it. But it's not the juice in the real world that, like, gets people's hearts pumping. Unfortunately, we're so enamored by the negative crap. Instead of those stories of like, wait a minute, we had a spiritual awakening moment as I got these people in their home when all hope was lost. Like, that should be the story that we share. But instead, it's the other side.
I agree with you. Let me bring up the other group in the room here, the realtors. I have found by getting out to the front lines at the
you now know a lot more.
I know a lot of realtors. I thank you, Corbin. You introduced me to several, and I've met.
So for those who don't know what he's talking about, he texted me he called me one day and was like, "Hey, great to see you at this networking event, whatever it was. Do you have any realtors that you could put me in touch with?" And I was like, I was maybe being a little bit of a dick, but I kind of thought you were messing with me. I was like, I'm a contractor. I've got more realtors in my phone than like any other profession. Like, what? I was like, who do you need? What do you need? He was like, well, I'm just trying to get in touch with basically, I want to cold call realtors and be their mortgage person. And I was like, cool. Hang up the phone and open the text message from me and just wait. And I think after the first 20, you were like, whoa, this is too many. And I'm like, I'm about halfway, buddy. Like, share contact. And I was like, I got a lot of realtors, man.
So all of the people that Corbett provided, I thank you guys for your patience with me and dealing with my cold calls. And I send, if you'll just take my call, I'll send you a cookie in the mail. I promise.
There you go. Look at that. You heard it here first.
But here's the thing that.
Sorry, continue about your realtor topic you wanted to bring up. I was like, it was a very funny interaction because we hadn't really like known each other that well. Right, and I was like, I got realtors, buddy. Let's go.
We met through a networking group in Cary called Meet and Mingle, run by Kaylee.
Kaylee Baines, great.
And she has a firm, Honeygen. It's great. She's a great person, made this great networking. And it's a bar kind of thing. You're meeting lots of people. We connected.
It's monthly, and it's at Bond Brothers East Side. And it's like the first or second Monday, I can't remember. But just look up Honeygen and or Meet and Mingle on social media.
And we'll be there in early March, right?
I'll be there because actually a member of a buddy of mine, we're in a different networking group called shout out to the Triangle of Trust. He's going to be the sponsor of the next one. I think it's either Mark Volk or Peter Ulansky. I can't remember which one of them is doing it, but one of them is doing it. And they were like, you got to come. I was like, of course I'll come.
And to the value of networking, here we are sitting down together.
Exactly.
And it's something there. But I will point out that in the game of real estate, there's so many people involved and so many new connections on a daily basis that it's hard to remember everybody. And I had now been, you'll get a kick out of this. I'm calling all these realtors. Corbett gave me your name. Corbett's this, Corbett's the best. And I'm at a different networking event and talking to.
Yeah, we're at the Rockstar Connect at Nomu in Durham. And we're both standing next to each other talking to Deb Lovick, who's another realtor I gave you, and she runs the Rockstar Connect, and I'll let you take it over.
Yeah, so I'm sitting there, I'm all swagger. Oh, yeah, Deb. So Corbett connected, said I should talk to you and all, which was all true. I wasn't fibbing, but I don't know Corbett that well at this moment in time, other than Corbett's an associate, an acquaintance in this business. And then Corbett shows up and starts standing there. I'm like, I stick my hand out to shake hand. Hi, I'm Adam. What's your name? Right in front of Deb. I was like, Deb, if you're listening, that was one of my biggest guffaws in networking to date. But
I literally was like, Adam, it's me. Like,
I was like, wait, I know this guy. Oh, wait, that's the Corbett that I'm saying introduced us. I look like a complete fool, but it was
in your defense, because I'm coming to your back here. At the meet and mingle, everybody's having a couple cocktails. Yeah. And at the Rockstar, I had just gotten a haircut. Okay. So, like, but still, you should have been able to be like, okay, Corbett with a logo on his shirt. Like, come on.
I dropped that ball.
A little bit. The ball was dropped, but it's okay. But I thought Deb laughed it off pretty well.
Yeah, it was great. So then the reason for the confusion on my point is that all I'm doing all day, every day is trying to connect with the entire realtor community in the entire triangle. But Raleigh, and
it's got to be insane for you because, like, what you can do, and that you can get around hurdles that other people can't, and you're probably also humble enough to know that if you can't do it, you might have somebody else that you can send somebody to. But it's easy. Like for me, I know you. I've heard a little bit about your story. I've heard through the inflection of your voice the passion. I've heard about the transcendental, almost meditative moments you've had with clients when you finally got that breakthrough. Like, that's enough for me, but I'm not a stranger or one of 40 realtors who probably has 40 mortgage people in her phone. Just like I'm a GC who has 40 realtors because every once in a while they need me to look at an inspection report. A realtor probably has 400 inspectors, house inspectors, and 400 mortgage people.
Sure.
And at the end of the day, they probably have one or two they love the most and send everybody to those people. So how, and maybe I'm asking you for the first time and you don't even have a strategy yet, but like, what's the strategy to get in the door other than a cold call? Because it can't be working that well.
So it is difficult, to say the least. And the strategy is to deliver on excellence and to actually achieve the objective, which is to provide excellent service to a prospect.
But how do you get in the door to the first moment?
I wish I had better answers on that, and I'm welcome.
Because like my answers are the same as your answers: deliver the product, provide. I got to get in front of somebody's face who's looking to do a deck versus the other 40 people who want to do who build decks.
So what I've been trying to do is be a better. And improve my listening skills and try to not make the guffaws socially, whether it's like, oh, I should know this person. I already listened and met them before. I should know them exactly, remember their name and who they are. Just be more personable instead of the quantitative analyst that I'm used to being. So for me personally, as a mortgage lender, that's a challenge I've got going from working in a team of people at the bank where I'm part of a group of 10. It's the same 10 people all day, every day of the week, 8 to 5, 8 to 7 p.m. even. But going to the front lines, and I just wanted to kind of shout out to all my realtor friends that I've made. You are all amazing, wonderful people. So, and I say that genuinely. Obviously, I just got done saying I want to win your friendship, so I'm going to say nice things. But the amount of work and effort that I see the realtors putting in to helping make matches between buyers and sellers and to try to solve the problem. And I know a realtor, a very delightful woman who carries old clothes in her trunk so she can crawl in the crawl space to go inspect. So there's these realtors are going above and beyond every day of the week to try
I got
to make
like
deals
3
happen.
of them hunting for me for like prospects for investments, and like they're all amazing, but you can tell who's working harder. You can tell who's like trying to get these in. And like shout out to my friend Angie, who's been on the podcast, who's a realtor. She has her brother's Air Force flight jumpsuit in her trunk for crawl spaces.
Yeah.
It's incredible. She sent me this picture one time of like gloves, mask, the jumpsuit, a headlamp, and I was like, you realize this is the picture I'm going to use for the podcast. Like, this is amazing. Yeah, I couldn't resist.
So that's the kind of thing that I'm talking about, that these realtors are going above and beyond, and they're also facing a little bit of an existential crisis right now with volume being off because of the whole mortgage story. They're also up against this big lawsuit I don't know if your listeners know about, where the entire business model of the 6% commission split half between buyer and seller, that's being challenged significantly right now out there. Whether what that'll evolve to as a new business model, especially for buyers agents, is really up in the air. So their careers are on the line.
And they have the same problem that you and I just mentioned about ourselves, where like at the end of the day, like transactionally, realtors are all the same. So how, as a realtor, do you prove to a client that you're better at clicking the MLS clicks? Like, you know.
Exactly.
So, you know, and I'm obviously I am oversimplifying what realtors do, and I'm not insulting. I'm just trying to make a point that like, just like me as a GC and you as a mortgage guy compared to another mortgage guy or another GC, if we are all on the same playing field of licensed and like morally straight, then we should provide basically the same thing for the same price. So how do we differentiate ourselves? And it's difficult. It's really, really hard.
It is. And I'll take that opportunity to self-promote for a moment that I don't think I'm that different from everybody else. To your point, I think that there's a lot of great mortgage lenders out there, and I've only had tons of respect for all the loan officers I've met around Raleigh and Durham and Cary and so forth. That being said, one of the things that we try to differentiate ourselves on is our service level and getting to the closing table. We try to do it in an effortless manner for the homeowner. One of the reasons these independent lenders exist is because of high quality service, high touch. You will get me, my personal cell phone. We're going to work through it. I got a team behind me that is just rock stars. We are going to get your loan to the closing table, or we're not going to mess around. We're jumping through hoops and hurdles in the background so you don't have to. If you go to a large bank, you might get somebody come out to the front who may or may not be licensed because they work for the bank, and then there could be a teller on the side. And then next step, you're talking to the 800 number and who's who, and it's a different person every time. And if one thing goes wrong, they all shrug their shoulders and don't care about you. Whereas I don't get paid until I get to the closing table. So I have a natural incentive, people in my shoes, like in the front office, MLO world, mortgage loan officers, we generally are going to jump through hurdles for you. And at my firm, we jump through extra hurdles. We pride ourselves on high quality, effortless service.
And what is the firm and the easiest way to contact you?
So the firm is Princeton Mortgage Corporation, and the best way to reach out to me is on my website, where you can apply or just connect to me at adamjhaller.com. That's Adam, JHALLER.com. Or you can reach me on my cell phone, 804-484-9748. And I know it's an 804 number. Well, it's because I've been all over. I lived in Virginia and Richmond for a long time, a dozen years ago for a dozen years. And everybody in the world has that number, so I just keep it. We all see cell phone area codes from all over the place. So I decided not to change it to kind of be a little unique. And
I've had the same New York 845 my whole life.
Why change it, right?
Not changing it.
Because then, like, you'd have to tell everybody you ever met. You have to live your life all over again to go. It's too hard.
I had somebody. It was either an advertisement I had put online or a video I had made, and somebody was like, "Hey, man, you know, it would probably help if you were more. You'd be more like personable or whatever if you had a local phone number." And I was like, "You might be correct, but I'm not doing it. I was like, respectfully, this is my number. It's on everything. I'm not changing. Like, dude,
Look,
it's just not happening.
I moved here in 2012. It sounds about the time you did, Corbett. I love it here. I consider myself a local in Raleigh, and my family goes back in North Carolina to the 1800s, and Wilmington and Wallace, North Carolina, and Goldsboro, at various towns. I have family who's been in North Carolina for over 120 years. Look, I'm a local guy. If you don't want to do business with me because you're hung up on my area code, that's a good way to weed you out.
Yeah,
that's like
that's
that's
an interesting point too. Like, especially in 2024, when
Right.
like everybody moves from everywhere, and cell phone companies make a huge point of advertising that you can keep your number when
Exactly.
you change providers and change locations and change states and
Right,
change
right.
countries and whatever. It's like,
It's amazing.
just hit save and save a name. Then you don't have to ever look at a number. Like,
Correct.
I don't even know I don't know your area code. When you call, it says Adam. It doesn't say
Right,
803 whatever. You know, it's like,
So anyways,
yeah.
so just
it's an
to
interesting point.
I think we should wrap up in the interest of time to point out, like, here's the thing. Nobody knows the future of interest rates. They will likely come down because of these whole issue that they're elevating now because of prepayment expectations. As we stay higher for longer, we stay at the 7% level for the longer time, banks will compete a little bit more and lower it. And I imagine by the end of the year, we'll get down to the high fives. That's just me and my crystal ball guess, but nobody knows the future. And rates change throughout the day, every day. I don't know what they are right now because I haven't looked since this morning. They are up over the past week substantially. So while they're in the sixes, not but a week or two ago, now they're in the sevens again. That's the way your interest rates work. So they try not to worry too hard about it. Just get the right loan with the right company is more important. The realtors are awesome. This is a key message. They can help you. Their value is well worth, if not more, well worth more than what you pay them in commission. Realtors are amazing people. I've got a whole laundry list of them now, just like Corbett, I've got dozens to refer to. So if you come to me, I can get you pre-approved and then connect you with the right realtor to fit your needs. And lastly, watch out for your back. Don't blame the world for your issues. You control your credit report. You control what's going on in your finances. You control a lot more than you think you do. So go ahead and just get that straight. And I'm delighted to take your call and try to work through that with you as well. Like, if you don't think you're ready to buy a home because of your credit now, I won't pull it. I'm not going to damage your, like, let's go. Let me just give you some free advice. And I'm very happy to work with people to just help them sort out their financial situation and think about it in ways that might get them to home ownership. If that seems like an insurmountable hurdle, it might be a year out, but let's get on there now. Let's get on a call and see what we can do. Thank you, Corbett, so much for bringing me onto your podcast. I know you like to swing a hammer, and I like to just pay for others to use the hammer. But no, I actually enjoy doing some renovation stuff myself, and I've done some woodworking projects. So I have tons of respect for builders. I know how difficult it can be. There's a lot that goes into to your work and making homes for people. Thank you.
Yeah, there is quite a bit. I was yesterday, just found out they accepted our terms for a flip we're going to do. And even just organizing all of the subs to meet at this one condo in Raleigh, it was, I'm just like texting back and forth, blah, 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 blah. And I was like, okay. I just couldn't even eat dinner. And then finally I had it all sorted. I was like, oh, okay, I got 6 people meeting me at 11:30 on Wednesday. We're going to knock all this out in 5 seconds, and then I'm going to go get lunch. Like, cool, now I can eat dinner. It's just like so much coordination, but that's what it takes. You got to get it done. And yeah, I mean, there is no excuse. Like, it's your life. Get it together. And that's in every aspect, whether you're trying to buy a home, whether you're trying to get in shape, whether you're trying to learn that skill, it's irrelevant. Like, you got to take charge. You get one life. You got to be in charge of it. And, if it's financial stuff, call Adam, call me. I'll put you in touch with a financial advisor. I'll put you in touch with Adam. I'll put you in touch with a credit specialist. But doing nothing, don't be upset at everyone else a year from now when you did nothing and you could have done stuff like gotten a free phone call and free advice.
That's
there's
right.
There's just no excuse. And as always, CRS Contracting and the Orange Hammer podcast is on all of your social media stuff. Check out YouTube. A lot of new work videos are being put up there every day. Cell phone is 845-489-6057. Email is corb, C-O-R-B, at WSDG.com. If you want to come on the show, need work, or want me to talk about something specific, those are the outlets you could reach me at. And yeah, there you go. Adam, thanks again for coming, man. I appreciate it. This was a lot of fun.
Thanks, Corbett.
Let's do it again. Bye, everybody.